Getting completely naked with your numbers. Can you imagine going to a doctor's appointment saying you have a rash or you don't feel well, and then but you have a rash all over your body, but then you don't take off your clothes so the doctor can look at you? Well, our businesses are almost exactly the same. And so many people are like, no, I'll just wear a t-shirt, or you know what? I'm going to wear a long sleeve shirt. I don't want to look at any of my arms. I'm going to pretend that doesn't exist. So this week, we're going to be sitting down with Michelle Scribner of Sum of All Numbers, and she is going to blow your mind on why it's so critical. And by the way, I am not an accountant. I would not be in business today. I would have gone bankrupt multiple times. Michelle's my personal bookkeeper. She is a very famous Profit First bookkeeper. She's in 2 of Mike Michalowicz's books. Motorbike Mike, what's up? We're going to get to her right now. So Michelle, welcome to the show.
All right. And aren't you glad that I'm not blowing your mind by actually getting naked, that we're just going to talk about numbers here?
That's right. Well, most people are going to be listening to this in a car. So
that's good. We could have had a lot of fun with that then. Yeah. So I'm going to say those numbers, I mean, I look at numbers all day, always like numbers, but I'm going to say that most business owners, they have some big dream that has nothing to do with the numbers that are on a financial statement. It has to do with what numbers go in my pocket or into my own personal bank account. But that's about all that they're looking at. So
for me, for me and my listeners, like, I'm a good old boy from Missouri with a Missouri education, and I don't have time. And also that scares the hell out of me to sit and be like, oh, like allegedly, according to the American Association for Accounting, you're supposed to look at a cash flow statement and a P&L and a balance sheet. Like, I don't know what any of those terms are. That's scary. How are you going to help me? Why should I care if, like, I'm, so many people are terrified of looking at their numbers, but like, what's profit first? What is that?
I think the other part that makes it so scary is the whole reason we have financial statements are for the IRS so that we can file taxes. And who wants to be thinking about that when you're organizing your numbers? So somebody asked me sometime, I'm like, what do I want my line to be? What do I want that net income? Because that's usually where we go. Just show me where the bottom is and tell me where it was. And I said, I don't really care. I don't really care what your bottom line number is. And she said, why don't you care? I'm like, well, if I'm the IRS, I want to be negative. If I want a bank loan, I want it to be positive. If I'm trying to sell my business, I want it to be super positive. And so,
right.
If you think about your numbers in that way, this is purely organizing them in a way that will make sense for you to file your taxes, but it doesn't have to stop there. So you've got these, I don't want to say they're archaic, but they've been around for a century now. And you've got these financial statements and these generally accepted accounting principles that all of us are bound by in that industry. But all it is a standardized way, like an SAT is, to say, let's get a standardized approach to say, what are we really looking at? And then that's where your starting point is. Okay, let's get them organized in that way. But
so I think you're saying most people are like, I don't want to look at my numbers because the only time I ever interact with them is tax season, and I'm not going to think about that.
Yep.
But you're saying, and I know you and I specifically, Michelle, we talk about this a lot, but you're saying it's critical to know what your numbers say, and then you can massage them to look different ways for different reasons.
Absolutely. And that massage gets a bad rap, but it really is taking those same numbers and saying, okay, I say it all the time. What if you look at it sideways? What if you stand on your head and look at it? Depending upon what your purpose is. And you and I do this all the time, don't we? We extract out the data. We're like, well, what's my purpose here? Okay, what does that number look like now? And I'm going to say that I will look at things, in a total view, in a quarterly view, in a monthly view. So the general practice, except for the restaurant industry, is to take everything on a monthly basis. We have our bank statements on a monthly basis. We file everything is on a monthly basis. So that's the core piece of that. But our businesses don't. When somebody owes you money, you're like, okay, you have until the last day of the month, and then you have to make sure it hits the bank. And we all know that that's not reality.
Well, I think is really critical and important to know. Can you just describe to us what's the way most business owners run their companies? Where's the money go? And then how do they spend it?
Yep, by looking at the bank, where's my bank balance and reconciling the bank statement. And then if they get financial statements, it's because they've had to do something like file taxes and a CPA said you've got to do that. But I know a lot of companies, they do it once a year. They just hand all of it over to the CPA and the CPA just crunches it all up there, puts it in an organized form so that they can fill out a tax return.
So
But that, it
so that's
doesn't help
like,
you.
so we're a business owner. We have, you know, I don't know, Bob's mowing. Bob's walking around. Bob's running his business. Bob's got a 5-gallon bucket. Money goes into that bucket, and from that same bucket, expenses go out, right? Payroll, tax, whatever, fuel. Bob's not paying attention at all. You say Bob just takes a 5-gallon bucket and dumps it on the desk. That's how most businesses are operated today, right?
Yeah, especially when you're getting started or when you are super afraid of your numbers, then it's like, okay, I'm just going to ignore them. And as long as there's money in the bank, I'll be just fine until tax time comes. And then some amount of organization needs to take place. But what's very interesting is that all business owners track the numbers that are important to them.
Right.
Hey, so how many people did I talk to today? How many of this did I sell? How much do I need to reorder or whatever else? So every business owner has some number that's really critical to them. But that's like saying, okay, I'll take off my hat and you can just see my head. If we look at everything as a full picture, what we're really looking at is, first of all, they're historical. So it's already happened. But if you are looking at those numbers and saying, I'm looking through the rear view mirror, I can see what happened. Oh, I don't want that to happen again. What am I going to change differently? And now you've got some real critical data. And the more data you have, the better decisions that you can make.
I got it. So I'm going to go back to this example with Bob and a 5-gallon bucket a bunch. Most business owners are just making decisions saying, is there money in the bucket?
Yeah.
Can I spend it? Yes, no. And they're not
Yeah.
paying attention to anything else. So I'm just going to say, I'm Bob. You personally know this because I'm running around. So what's the alternate? Because we don't have time to sit down and look at the P&L before we make a decision. We still need that knee jerk. Hey, Bob's looking out there. He sees a mower for sale, whatever it is. We need to be able to jump. I need to be able to jump on a property immediately or take that deal down or whatever it is. How can someone like Bob, which is every business owner, what's the mechanism that's like, I'm not going to go to Harvard and figure out how accounting works.
No.
What's an alternate?
And I'm going to say most business owners, especially in the beginning, should not hire a bookkeeper because you should be putting your money in another way, as important as it is. And I run a bookkeeping company, but I'm telling you that find another way of tracking that money until you're able to truly afford it, because I'd rather you put your money in marketing or I'd rather you put your money in investing forward, but you've got to have the knowledge of it there. So with that being said, it's a simple thing. Money in, money out, money in, money out. Well, what is the money in coming for? So a lot of times a person will take their bank statement and they'll just load it into a spreadsheet. And I'm not a proponent for spreadsheet bookkeeping, but you've got to start somewhere. And in the old days, everyone had the green ledger paper for it. The money coming in, what was it for? Oh, I got reimbursed for this. Well, that's different than I made a sale. You don't want to pay taxes on something you got reimbursed for. And so all of a sudden you could say, oh my goodness, I've got to make sure every deposit that hits the bank account has to be, said, this is what this was for. Now, the more savvy you get in your business, if you've got different things that you're selling or different revenue streams, boy, don't you want to know, hey, what's my most profitable piece? And so you start getting a little bit more sophisticated, but you can start with your revenue. And what's funny, Hugh, is that most business owners have a way of tracking their revenue and their clients.
Right. Most people are just paying attention to that. So like, I'd say step one, if no one ever does anything else, is have 2 buckets. I'm Bob. Have 2 buckets. Bucket 1, the money goes into bucket 1, and then you pay things out of bucket 2. And then don't let bucket one have a credit card or checking attached to it.
Absolutely. Absolutely. And I'm going to say that you've got to look at, I'm such a big proponent of your personal behaviors. So Hugh, how many things have we tried to implement with you to like rein in the personal behaviors so we can get what we need out of you and then really give you what you need to make decisions? So what works for you might not work for someone else. So whoever is listening to this, think of what works for you. And I've got somebody that everything that they did, they were building houses, commercial buildings, and everything was on a Post-it note. And you know what? It was right on. In fact, when we started doing his bookkeeping, his Post-it notes were better than our bookkeeping was for him. He could say it's off because of the Post-it note. And I was like, this man is brilliant because he's figured out a way. He's like, I know it's wrong. And my Post-it note tells me. So you know what we started doing? I need you to send me like a screenshot of your Post-it note and we're going to make sure that everything reconciles and we know that something was wrong. Because when you have a bookkeeper, honestly, the bookkeeper is not following you around seeing where you're spending your money. You're carrying the bucket, you're spying things. Cash is another one where it's like, hey, make sure you get a receipt for that. Well, anyway, whatever it is, find what works for you. The best part is we're all carrying around computers in our pockets by a phone. Take snaps, take a snap. Like, oh, this is what this is so that you remember. Do a video. Hey, I'm over here. I need to remember to do this. Whatever it is, just capture that in the moment, because if you're starting a business, you're running 1,000,000 miles an hour. And you know what? You don't have time. You don't have time to even get naked with your numbers because you're running your business. So that's another piece of it right there.
And I think with that, you're talking about this guy, this brilliant guy with the Post-it notes. That's his way of doing it. We all have some kind of way, right? Bob's Moen has some kind of way, but more often than not, everyone uses the one bucket method. And then when things go wrong, they have no idea what's going on. They just know the money is gone, or there's not enough money to do the thing or make payroll, or pay taxes, right? Because that's the kind of one of the big stories in Mike's book, Profit First, is at the end of the year, they're like, hey, you made all this money. You owe us money. And you're like, what do you mean I owe you money? There's no money in my bucket.
There's no money. Exactly. So I'm going to say that another reason why entrepreneurial business people they do not like to look at their numbers is there is an insecurity of, when you talk about assets and liabilities, I don't understand. And unfortunately, those of us in this industry, it comes so naturally to us that we just talk above your head, not meaning to. And perhaps there are some that have egos out there that do, but that doesn't help anybody. And so sometimes it's like, well, I don't want to feel stupid. And so I'll just walk away, not ask those questions and such. That's not any way to run your business as well. You don't have to necessarily, I did a study a long time ago and it was like every single one of our Rockefellers and Schwab and all of those big moguls, the one thing they all had in common was they knew where every penny went. They just knew where their money was. And so when you are aware of it, then you really can make some decisions. So starting off, all right, what is this money coming in for? And then what is this money going out for? And we all know it's easy to burn through money very quickly. So now it's and you know what else is really easy to burn through is all the subscriptions that you can buy and then you forget that you have. So that's important too.
All right. So just seeking the clarity, knowing where every penny goes from a profit first perspective, it basically teaches you got your 5-gallon bucket and then you have a bunch of 1-gallon buckets. You have 5 1-gallon buckets, paint buckets, right? If money goes in, pour it into the other buckets and then don't use it for other things. Or if you were robbing from one bucket to the other bucket, something's off or wrong. Can you explain that right there is pretty much, that's the whole thing. That changed my life and that's prevented us from going bankrupt many times. Not once, not twice. Can you count? I came to you because I was like, hey, the state of Missouri is trying to shut us down because it says that we owe them taxes, but I don't think we do. And we definitely did. what's going on.
Yeah. All right. So if we talk about profit first, that's the whole reason why we own our own businesses. I'm going to have all the money and I'm going to have all the time in the world. And what happens is we don't have either one of them. And the timing we'll talk about. So if some way when the money comes in, you immediately take a portion and you hide it from yourself. You know what? Somehow you end up being able to live off of the rest. It's kind of an interesting phenomenon, and it's a part of human behavior. And the people, that's why our parents and our grandparents are like, make sure you save, make sure you save. Well, saving has gone, they didn't have credit cards way back when. And so you did have to save because there was no way to get yourself out of when a rainy day came. All of us have credit cards in our pocket, probably more than one, of which if a rainy day, your car breaks down, you pull that credit card out, but that's not the way anymore. So your profit, as soon as you take that comes in, you put it someplace based upon your behavior. If you're going to go steal from it, then go put it in a different bank account. My favorite thing is to name it something that you would never steal. My child's college, or my honeymoon account, or whatever, something like so endearing to you that if you took it, it caused you emotional pain.
Every business owner, I have ever met, and we all meet, is exactly the same as if they just didn't make that extra sale. If they just didn't make that sale, or those 4 orders, or they got 8 sold instead of 10 that month, they're still going to figure out how to operate their business. So you're saying intentionally engage in that. So when Bob comes in, the money goes into his 5-gallon bucket every month. You're saying really Bob should have a system in place. It's not complicated. Bob will have a 3-gallon bucket to run his business and 2 1-gallon buckets for taxes and payroll and whatever, a bunch of half-gallon buckets. So Bob gets $1,000 in his bucket, $1,000. $150 goes into payroll or into taxes. $100 goes to pay himself. $100 goes here. Oh, he's got $700 left to run his business. Bob's going to then take that $700 and just still do everything the exact same way he did it. Do I have money in this bank account? Do I spend it? Yes or no? And so many people don't pay themselves. And that was me too. I think right now I'm about to start paying myself a little bit more, but I think I, at some point, started stealing. Actually, no, I think I started by stealing $1,000 from myself. I call it stealing from myself and hiding it from myself, because otherwise, I'm not going to say, oh, I'll take it off the top. No, I have to steal it from me, or else I will blow it because I'm a moron. Right. So I think it was like $1,000. Now I think it's up to $1,500 a month. People are like, Hugh, you're super millionaire, all this stuff. It's like, no. Before anything that comes in the door, it's taken off the top. Taxes are taken off the top. Emergency reserve are taken off the top. And then what's left over is all I have to operate the businesses from. Yeah. And I don't think I understood until really meeting with you, interacting with you, how to look. Now I'm like, oh yeah, P&L, it's easy. Let's look at the balance sheet. Before, it was like, it's just this super scary thing. And then you kind of showed me with ease. So step 1 was like, I need to figure the bucket situation out, because Hugh's going to keep behaving like Bob, and Hugh's going to blow all the money in the bucket. So just make the bucket have less money and then make sure there's enough taken off the top. Once that was done, you were able to help me see, because your taxes are cleared for sure, and your payroll's cleared for sure, and this other thing's cleared for sure. Now this is all you have left for marketing, and all you have left for this, and all you have left for that. That was the very first time I was like, oh my gosh. Now, a lot of our listeners are going to come here because, we're a community of investors, right? We're business owners who are going to invest. And can you, what's the fundamentals that people should be looking at for those 2 things? Because explaining it to, not even to a 5-year-old, just try to explain it to me if you can. How do I read it? Why do I, one, and why should I care? I gotta go mow another yard. So if I'm an accounting person, I'm you, and you hire a plumber, Michelle, you hire a plumber because you don't build houses. That is just a normal expense. That's not a cost of goods sold. But if I'm building houses, then that is a cost of goods sold expense. Okay, now I'm officially confused. Who cares what both expenses? All right, so that's why it's so important to know about your pricing, and then
So
you can
now
figure out if you can pay yourself, right?
exactly. And when you start your own business, depending upon what your situation is, you're either going into debt, you have another job, or you're like, no, I'm going to live within this amount. Because really, until you start making sales. So let's assume you've got a business, it's going, and you are making sales. You really have to look at your personal, what you need. And in the beginning, you might need to take the majority of that money to live off of. But then as time goes on, you can put more money into where the company pays for things and you don't have to take as much. So for a rule of thumb, after you get to that real revenue number, your operating expenses should never be over 65% of your real revenue. And that, for an entrepreneur, makes sure that your business is something that somebody else will want someday, whether it's your child or an investor or somebody else. That is what will say you are a healthy business.
So I think what you're saying, to kind of explain that a little differently, I got good at reading P&Ls and balance sheets because I'm looking to buy businesses. And I run across mom and pops who have done what you described. They've made their books on purpose look bad because they know their numbers and they played the game, which is, it's a company truck. It's not my pickup. It's, it's not Bob's pickup. It's, it's the company. It's Bob's Mowing's pickup, right? It's this, it's that. My wife's minivan. I'm going to write that off, those kinds of things,
Travel's another one. It's like, the next guy who runs this doesn't have to go travel to this conference, but I am, and I'm going to write it off.
And so a lot of business owners are playing the game, which is great. I love it. I love playing the game, but they've made their books look bad, didn't do planning, and then maybe they need to sell. Maybe they want to sell. Their kids got into law school, so now they're not going to come back for Bob's Mowing. Bob wants to sell now, but it looks bad, and they don't know what to do, right? So with some planning in advance, they can make those look certain ways, right?
Exactly. And that's another reason people have entrepreneurial businesses, is that there are rules out there that are completely legal that help you save on what you pay taxes and your ability to write it off. That if you don't own your own business, you can't write it off. And that's why the politics get so mad at those smart millionaires who have figured out how to write things off. But they're not doing anything illegal. They're just, that's part of what being an entrepreneurial business person is.
I mean, realistically, the people who wrote the tax code are the politicians who are involved, and they wrote the tax code a certain way to incentivize our behavior as the population. So when they say, if you have a vehicle over, 7,500 pounds or whatever it is, you can write that off in 1 year. It's because they are driving some kind of factor that wants us to go buy vehicles.
It's a great.
We are just, so we get this a lot in real estate. Oh, I don't pay taxes. I don't pay taxes in real estate. I pay a crap ton of taxes in real estate. Hugh pays lots of taxes in real estate. I have almost no income tax. I don't think I've paid income tax once in the 5 years I've done real estate. And that was because I didn't listen to Michelle or didn't plan stuff before I sold stuff. But just because I didn't pay income tax doesn't mean I didn't pay all the employees' taxes, all of the property taxes. Well, why do we get that? We are depreciating our assets because the government wants us to go into sketchy neighborhoods, almost getting stabbed and shot, to turn it. So they want to incentivize the behavior of the government not spending the money to do that, because we all know how the projects go. We want dumb people like Hugh and Bob to go into the sketchy neighborhoods and spend their money. And then we'll give them a tax code, a tax break, and they write it into law. So that's where people.
And you got, what a great example. So I'm going to say depreciation is going to be like that mole. Is it just a mole if we look at it, or is it a cancerous mole? And so when we look at depreciation, it's nothing. It is a tax strategy when you have something that you can write off over many times. And you don't need to know all of that right now. There are professionals out there, and probably a bunch of YouTube videos too that will help you. But when you recognize that and you know your numbers, you can be like, oh, I'm going to use that to my benefit and such. when you're organized and you have your numbers before you, then you can make decisions before it's too late. And I think
So
that's one of the major things.
can I give some examples? Because like
Yes.
this, I want to relate it to like the average person. And then
Yep.
I'm going to use some weird examples because people remember them. You can depreciate a kangaroo over 7 years. Okay, let's talk about cattle. If you're a farmer, by the way, most farmers I know, outside of them being geniuses for actually doing the farming, most of them are playing the game. I'm just going to say they're playing the game. So let's talk cattle. Michelle, is it, I know this isn't a tax question, but I don't think if I were to say what would it take for me to write off a cow? Can you answer that for me?
I could find it out, but you can write off a cow because it's your asset.
Well, it's a depreciation, but
Yes.
how would you do that?
Oh, how could you do that? Oh,
Right.
I see. Okay.
Well, what it comes down to is I could depreciate it all in 1 year,
Yes.
or I could depreciate it over 7 years. Sorry, I said the wrong thing. I could depreciate it over 7 years, or I can't write it off because it's inventory. So it depends on what I'm doing. Going back to your cost of goods example, because we're in real estate, I think it's going to be really, really critical for anyone with a product is going to be able to if you manufacture a product or you have a product, your COGS will be crystal clear. I have to buy this many screws and this much steel, and then we make the thing or whatever. If you have a service, it becomes more squishy. So like I'm in real estate. That's the bulk of my businesses. I have a product and a service kind of, because my service is renting the space out.
Right.
So Michelle, you can't write off your cleaners into your COGS, but I have to, and I need to do that because I can't turn the unit and get it re-rented for Airbnb unless it is clean. I could not have made that revenue without that possibility. Of that cleaning happening for that space.
And a great example of when you first start off, you might be the one out there cleaning. You might be that person cleaning. And so you know what? You better put some money in your pocket for what you did because you don't want to be cleaning apartments the rest of your life. So then what do? You get your kids or your niece or your nephew or whatever. And you're like, I'll pay you $10 to go clean the apartment. And then you get bigger and better. And then you're like, okay, finally I'm large enough that I'm going to be able to hire someone to go and professionally clean it and they get the job done really well and nobody complains and you don't have to follow up and clean up after a child or whatever else it is. So that's a good example of when in the beginning, there's not enough coming out of that bucket to support yourself and everything else that you want to have happen. But later on, there will be enough coming out of that bucket that it's like, all right, now we've got enough revenue coming in to be able to no longer have to do those things that saved us money in the beginning.
Yeah. And that you're tracking it. I think it's so
You're
critical.
Tracking it. Yep, exactly.
All right. I'm going to throw you not a curveball, but this is a problem that you and I have had a lot of, partly because I'm insane, right? I am Bob's mowing, right? And the other problem is real estate. So a lot of the listeners are going to get into investing, and I'm basically teaching one of the buckets is going to be your investment bucket. You're going to take money off the top. So Bob's mowing gets paid. Bob's going to throw $1,000, of his whatever 10 grand a month he makes into a bucket, because so many entrepreneurs that I find when they've been at their business for 10 or 15 years. And I say, the first thing I ask them is, look at your bank account right now. Are you happy with the number that's in there? And the answer is, I have nothing in there. I'm like, cool. Well, if you took a little bit off the top, you're going to figure it out. Let's go invest that somewhere. It doesn't have to be real estate, but it often is.
Yeah.
Real estate, I ran into this big problem. And that is that because I'm using debt on purpose, strategically, and I believe aggressively, but smart, my numbers are broken. So can you explain it like that? Like what? How?
Debt is one of those things that for most businesses, there isn't an asset attached to it. They get a small business loan, they get a line of credit, something like that. And the thought is, hey, I'm going to borrow this money. I'm going to be able to build this amazing thing and it's all going to be coming back. And I love it when that happens, but most of the time it doesn't. The other thing is it takes
Right.
a long time to pay back $100,000 if
Right.
you do it on a monthly basis on
I'm
the
going to borrow
minimum.
$100,000. I'm going to go buy this machine. And then that machine's going to make me all this money.
Exactly. Exactly. So in that case, you've got what is now a cinder block attached around your ankle. And so if that payment is $400, $500, $1,000, whatever that payment might be, that is that much less you have to pay on a monthly basis. So I'm not against debt as long as it's recognized of what is the plan for this, because it's really easy to blow $100,000 in a business and a lot harder to pay it back over time. The difference with real estate is that you have an asset that at any time you can sell, and it is appreciating over time as well. So you're going to get more. It's going to be worth more in most cases. And we've seen it where it hasn't been. But real estate is kind of a long-term thing for the most part. The other thing is it has the ability to make money for you to pay off that debt. You just have to be in a position so that if you expect to rent it out and that income is going to pay that debt and it doesn't, that's where that cinder block comes in. So you really have to look at those numbers as well. You get to write off the interest, which nobody wants to pay interest, but you do get to write it off. I mean, you don't write up the principal. And that's where I say that you've got to look at both your profit and loss and your balance sheet, because it's not going to give you the full picture unless you look in both places. The interest hits the profit and loss. The principal hits the balance sheet and makes that loan go down. So 10 years from now, after making payments, you owe less. You got to write off the interest and you have a piece of property that's worth more than you paid for. It's a pretty good thing to get into for real estate.
Yeah. So the gist of what we're saying is we're going to go back to Bob's mowing example. Most Bobs will borrow money to hopefully not buy a, maybe initially to buy the truck, the trailer, to do the whatever.
Sure.
You're saying real estate's different because Bob, as he's going about his 10 years, is occasionally going to buy a property, or maybe he buys the commercial building that he's out of.
Yeah.
At the end of the 10 years or the 30 years that Bob's been in business, when he goes to sell, he still owns it. And that's why it's different.
Absolutely. Absolutely. And in the case of Bob, if he borrowed money to buy a truck and he borrowed money to buy lawnmowers, guess what happens in 3 years? They wear out.
Right.
They're worth nothing.
Hopefully he has enough money saved up to not have to borrow again to buy.
Exactly. So the cost of having that equipment, I know we need to have equipment and such, but it really needs to be looked at like, all right, how much do I truly need to make in order to pay this? Because at the end of a certain time, this isn't going to last any longer. And I love it when people say, I'm just going to run this thing into the ground. You know what really happens to you when you run it into the ground?
You repair it forever.
That's exactly right. It's before you run it. It's not like, I just think it's such a funny concept. It's going to run perfectly, and then one day it's going to be in the ground. No, it starts costing you 300 here and then 700 here and then 10, whatever else it is. And so if you're not thinking and planning for that, and guess what your numbers show you? How much did I spend on repairs last? How much did I repair? All the time when I'm working with business owners.
Then you're like,
hey,
oh,
it looks like,
$6,000.
you spent $10,000. It's like, it's time to sell. It's time to get rid of that and then go get the brand new one. I can't afford the brand new one. Well, you can't afford $10,000 to be dumped into this. And then you can use those numbers to say, what if it cost me $10,000 for the next 3 years? Well, can you afford $30,000 on a? Yeah, you can. Yes, you can.
On a new
because
truck,
it's gonna,
right?
The 30,000's gone. So would you like a new vehicle or would you like your old vehicle? And you have to look at that. And the only way is if what was in that bucket was organized. So we've got that little hole that comes out and says, this is where my operating expenses are. But then you've got all those receipts or the bank statement or whatever say, this is all the repairs. Oh, and this is all my subscriptions. Oh, and this is what I was paying on advertising. Oh, and this is and you start looking at all of those numbers and saying, when it's amazing, Amazon is brilliant. And I have seen so many business owners like, you're kidding me. We spent that much on Amazon. I had no idea. because they made it so easy to click once and it comes, and then you see it. When you see how much you spend in Amazon, it's like, why are we doing this? We could go have bought the whole whatever it was and take I mean, Amazon's pretty good on some good keeping costs down, but it's not the best way. Instead of buying in bulk or whatever other ways that you can do, or putting some guardrails around that and say, do we really need that? Because they made it just way too easy. But you don't know that until you organize those numbers.
I think that's a big deal. So I know we're kind of nearing the end, of our hour here. So for the people who are listening to this and they're like, I want that.
Yep.
I don't know. I'm a little intimidated. What are the first few steps that people can take? I want to point in this direction.
Okay. Everyone has a bank account. None of us can operate a business without a bank account. So the first thing you do is you go in your bank and you open up 3 more accounts.
What
minimum.
should those 3 be?
And the 3 should be, one is for your profit, one is for your taxes, and one is your operating expenses. And the one that still exists is your income. It used to be, it was hard to change the account because everyone had paper checks, but nobody has paper checks hardly anymore. So most of the time, your existing account is the income account. It's where all the money comes. And then you're going to have a profit account, a tax account, and then an operating expense account. I'd love you to have an owner's account as well.
So
and those
4
are
proper. So
4.
And this can be done probably in 15 minutes for anyone listening. If they're like, I want to fundamentally change the life of my life and the lives of my children and my family forever, they just got to take 15 minutes once to do this.
Absolutely. The best part is there's a bank out there that partners with Profit First. It's called Relay Bank, and you can do it, and it's a matter of minutes. And then you've got all those accounts, and you could add accounts on the fly. You can be in your car and like, I want to add another account. Let's say that you're like, I want a new truck. So in essence, what you're doing is 100% of the money comes in to that income account and 100% goes out to those other accounts. So 0 is left in the income account. Now you know what you're factoring, and you get to decide, but put something in your profit account first and just start that process. And Hugh, there have been times where I'm like, all you're going to do is put $10 in there. That's all you've got, but you're going to put $10 in there because something happens when that habit starts. And then you're like, this is ridiculous. I want to put more. It's amazing what changes in your profitability when you start paying that profit first.
Well, and if my company is operating on $1,000 a month, we're going to be able to figure out how to make it operate at $900 a month. It's almost no difference because there's already that variability.
There is, exactly. One of the things that we learned through COVID was when the revenue stopped, when the world shut down and people they got very, very creative with how am I going to do this? And entrepreneurs are some of the best innovative people out there. And so when you get your back against the wall on something, it's amazing the ideas that come out. Well, maybe we could do it this way. Maybe we can do it this way. So in essence, you're making your creativity come out by limiting yourself on the amount that you can spend. And you will be surprised at the things that you come up with to operate on less.
Well, it's because you're using your head, not your wallet. Because you don't have anything in your wallet.
That's exactly right. Exactly.
But we're, like you said, I mean, entrepreneurs, they're usually driven, right?
Yep.
Most of them are scatterbrained, but they're going to take care of their guys and their people at the end of the day if they can. And then they're going to take care of their family. Normally, they put themselves in second position.
Yes,
almost everyone, even me, like I think maybe in the next few months, I'll end up starting to actually bring a little bit more into the owner pay account. But for 5 years, I effectively have it, right? The $1,000 a month, right? Minimum wage means that people around here are making $2,600, $3,000 a month, and I'm on $1,000. So it's like, hey, how do you roll that? So
that's because we're in it for the long term. Our businesses are meant to be something like, oh, I'm going to just put my blood, sweat, and tears into this. But the thing is, you can find yourself 10 years and 20 years down the road still putting your blood, sweat, and tears in it if you don't start this right now.
And have nothing to show for
it. We always think it's going to change later when this happens. What? Don't wait. Just start now.
So in 15 minutes, they can have the accounts, or they go to Relay in 15 minutes, whatever.
Yep.
And then they can have all these accounts. I like Relay because it'll automatically do all of it for
I know.
you.
You can set the percentages and say 10% goes here, and it'll do it automatically for you. You don't have to do any transfers, or you just log in, say, make the actually, you don't even have to log in. It'll do it for you that way too. Yep. It's very good. Then it is a matter of like really tracking and then looking at the numbers in the way that makes sense to you. And the funny thing is that besides it being called a profit loss and a balance sheet and some certain things, you can name those accounts anything you want. So make it make sense to you. This is my software for the back office. This is my software for the job related item. This is my whatever makes sense to you. Change the names. What comes out of the can is meant to be customized.
I loved it because like, this is the marketing budget. This is my social media budget.
Exactly.
This is payroll. That's a big one. Don't touch payroll. This is taxes. Named
but
it.
Even on payroll, Hugh, sometimes you're like, these are my tech crew, and this is my sales guy. Right. This is my office. And now all of a sudden you're like, oh my goodness, I didn't realize that we had grown to that size, or whatever else it is. So as you're
most companies, they'll do that for the first time, and they'll be like, oh my gosh, my office guys are costing me XYZ, but they're always wanting to fire the guys on the floor. The guys on the floor is the one doing all the work.
That's exactly right. Because what does that, when you truly get naked with your numbers, then it's like, oh my goodness, there's nothing that is, now you're like, now I can truly see it. I can see what's going on here. You know what the best thing is like all of a sudden you're looking at it and you say, what happened in this month? Why is there $600? We've found fraud by employees by looking at it that way. One plumber said, I gave a perk. Everyone, I told the guys, you can go get coffee is on the company. Well, she thought 1 cup of coffee in the morning. And you know what happened? They were going to McDonald's 4 times in a day, each one of them, because coffee was free. And she said, I mean, it was only $3.99 or $2.99 or even $9, but that wasn't that. She's like, what happened here? And you could see it in the books. It was like there. And then all of a sudden it was up there. And she's like, what happens? There's a story. There is a story behind your numbers. And you want to be able to say, I want to say what the story is. And by having your numbers there, you get to write the story.
Are there any resources that you have or you'd recommend, books to read for people who are like, I have no idea what's going on?
You've got to start with Profit First, and you only have to read the first half of the book. The second half is all the mechanics of it that you don't necessarily need, but that will inspire you to really say, okay, this is going to work. It will speak to you. And if the audiobook is amazing on that. And that really is what is going to launch you into everything you need to know. And then I'm going to say that's worth quite a bit.
Okay. Awesome. Well, and if people want to know more about you and your company, where should they look?
Great. The name of the company is Sum of All Numbers. That's SUM. Sum of All Numbers. And we do bookkeeping. We do fractional CFO work. We do consulting. We help you launch Profit First. We help you get your QuickBooks set up or get yourself organized. I mean, anything that has to do with your numbers besides taxes, we're here to help.
Oh, I love that. And for the listeners, I've used Sum of All Numbers for 5 years now. 4 years, 5 years.
Coming up on 5 years.
And we went to them because we were like, Missouri is going to try to put us out of business because we don't know what's going on. And then they helped us. They solved it in like a week.
You know, Hugh, I'll never forget because we started in October of 2020 and you pulled off the side of the road with a piece of paper and said, this is this company. And then this is this company. And this is this company. And it was like, this is the dream of what we have before you bought your first property.
I did that before I bought my properties.
Yeah. You had just barely begun in October with the first.
Yeah. So it was like, I had already broken it all out. So,
not the small, the other houses, but it was the big venture. So
yeah. And I'm really excited because they had, for me, when I first read the book, I was like, I'm Bob's Mowing, right? For the listeners, for the analogy. Okay. Bob's not going to change anything. He's just going to get it right with a 3-gallon bucket, and everything else will just automatically, and he's not allowed to touch the other stuff. And right there, from then on, it was just like, okay, well, every time we buy a company, for us, we are always creating new companies, which is unique. We just have 2 accounts, inbound and outbound, but all of the money goes to the emergency reserves, the taxes, this and that. So then we
annual
never
payments.
are worried.
I mean, think about it. You own property, and guess what? Once a year, you have to pay a big chunk for property taxes or a big chunk for insurance, or, whatever keeps you up at night. That's what taking the 5 gallons of whatever's there and putting that into, you still have 5 gallons of water, but it's going to be spread out based upon where your pain points are and making sure you pay yourself.
And then I don't ever have to change my behavior. I mean, a little bit, but still going to make the knee-jerk reaction based on the one account.
Yep, exactly.
So that's huge.
And if you have to, then you start recognizing what are the things that are sinking me. Oh, well, we use the credit card too much. Okay, put some limits around it. And you start, once you have that evidence sitting before you, I'm like, oh my goodness. Then you say, we're not using Amazon anymore, or everyone who uses Amazon has to log, whatever you do, put it on a Post-it note. I already used Amazon once today. We can't use it again. Who knows? You can figure out what's going to work for you,
right?
To put some guardrails on yourself with it. I would say, most of the time, I only want the business owner to be able to spend his or her money, but take the credit cards away, or the ability for everyone else to spend your money.
Or have limits.
Yes.
Like we have $1,000 a month limit for that position. Why are they attempting to spend $2,000-3,000? Oh,
yeah, because it's easy to spend somebody else's money.
Right.
That's really easy.
Right. Or it's like, okay, they spent it. It's like, oh, actually that was a real thing, but it hit the limit. So I was notified. So now I'm like, oh yeah, okay, actually use my card for that.
Sure. Exactly.
So, exactly to your point, just to share the numbers for those of you who are tracking or listening to the podcast at all, one of Marty and I's main things from this year for our goal, and what we set in January, is to create our own mowing division. Well, where did that come from? That came from us knowing our numbers because of Michelle and her team, where they're like, Hugh, last year you paid $14,000 in mowing, and you spent $6,900 for fuel for mowing. And we're like, what?
What are we doing?
We're paying attention. We're like, okay, we ran the numbers. We can hire on another guy, and then we can in-house with electric mowers and take care of our own properties. And we can basically knock that $14,000 completely away. We'll be break even.
And have a crew member for other things as well.
Right.
Yep, exactly. So the things that you can see when you truly, truly say, I'm not going to be afraid of these numbers.
Well, and like, we never started out ever being like, well, we should have our mowing division. But the numbers said, you know what? Some people love mowing. Let's staff up. We'll bring on a member, because the numbers say this is what, in order to meet your demand, in order to serve your customer, these other things must be met. So if these other things must be met to serve your customer, then I will make a business decision. That's all we do every day as entrepreneurs. So, and I never would have known that. We never would have known that had we not known.
Yeah, it wouldn't have been an innovation for you had you not seen those numbers.
Well, any parting wisdom for our listeners out there?
All right, just get started. Just do it. Just
get started.
Don't wait. Just do it, and reach out and ask questions.
How many people reach out and don't get started, and then you're talking to them like 2 years later, and they still haven't just done the first step?
Yep, exactly. So many.
Well, thank you so much, Michelle. I appreciate it.
All right.
See ya.